1. Financial protection provided by accident and sickness insurance. The insurance companies' acts of the various provinces define what is considered to be accident and sickness (ANS) insurance. The provincial acts are similar in content and most will include the following when defining ANS insurance: black small square benefits for loss resulting from accidental bodily injury, including death, suffered by the life insured; black small square benefits for loss resulting from the sickness or disability of the life insured; black small square refund of expenses incurred due to sickness or accidental bodily injury suffered by the life insured; black small square refund of expenses incurred due to medical treatment of the life insured. More simply put, accident and sickness insurance relieves insured individuals of the burdens of medical expenses or income loss arising from illness, injury or necessary medical treatment not covered by the provincial health insurance plans. This chapter describes the risks that businesses, individuals and their families face, and the ensuing needs that are met by various types of ANS insurance products. The products themselves, as well as the process of recommending and implementing them, will be discussed in more detail in the chapters to come. 1.1 For individuals and their families. Although various types of accident and sickness insurance can play a critical role in protecting the financial viability and longevity of many businesses, the primary role of most ANS policies is to protect the finances of individuals and their families during times of medical or health crisis. 1.1.1 Financial goals of individuals and their families. Most families have a fairly common set of goals that require regular cash flow and a surplus that can be invested for the long term. Although the specific amounts and details will vary from family to family, the three main financial goals remain similar: black small square accumulate wealth, patrimony; black small square create a retirement income; black small square meet family needs. 1.1.1.1 Wealth accumulation. Once immediate needs, food, accommodation, clothing, means of travel, entertainment, etc., have been provided for from current income, any surplus should first be allocated to setting up an emergency fund, 3 to 6 months of current expenses. Excess income can then be earmarked for wealth accumulation goals, both short and long term. Wealth, assets, can be employed to achieve a wide variety of family goals: black small square to be invested in a home or vacation property; black small square building a portfolio of securities, registered and non-registered, to provide additional current income, growth or funds to draw on in retirement; black small square building a legacy to pass along to the next generation or to posterity in general. 1.1.1.2 Retirement income. At some point nearly everybody retires. But retirement means different things to different people. Some want to travel, some want to sit by the lake at the cottage and enjoy nature, others want to spend their time engaging in community help projects. The list is as diverse as our people. But all types of retirement have one thing in common: they all require income in one degree or another. Retirement income can come from a variety of sources: black small square government pension plans, Canada/Quebec pension plans, CPP and QPP, and old age security, OAS, black small square employment pension plans, black small square private pension plans, registered retirement savings plans, RRSPs, black small square non-registered investments, black small square inheritances, black small square part-time employment or self-employment, black small square liquidation of assets. But almost all of these sources require that the retiree has worked, saved and invested for a significant number of years prior to retirement. And continuity of work can be interrupted by a number of factors, including economic downturns and disability. It is in the area of disability and the recommendation of products that can replace income during periods of disability that the life insurance agent has a significant role to play in protecting the financial welfare of individuals and their families. 1.1.1.3 Family needs. Prior to retirement and prior to or concurrent with investing for wealth accumulation, families need to generate income and set aside savings to meet ongoing family needs. Tuition and room and board, for higher education for children, orthodontics, family vacations, these and more all need to be provided for long before retirement. And many families are faced with providing extra support for special needs children, dependent aging parents, or boomerang children forced by economics or other circumstances to return to the nest. 1.1.2 Financial risks that threaten individuals and their families. Meeting the above-noted family goals is primarily dependent upon clients' ability to generate sufficient income and savings over time. Unfortunately, there are a number of risks that could disrupt those plans, such as black small square unexpected expenses, black small square loss of income or savings, black small square lower standard of living, black small square inflation, black small square longevity, black small square debt. 1.1.2.1 Unexpected expenses. In theory, a budget will help clients to match income and expenses and prepare for future financial eventualities. But not everyone has a budget. Not everyone who has a budget is good at making a realistic budget. And certainly many people with budgets are not good at sticking to them. But even the best budget cannot anticipate every possible expense. Some expenses, like the need to replace a vehicle every 6 years or so, can be anticipated and planned for by setting up a sinking savings fund to prepare for the expense. But others may come out of the blue and have the potential to completely derail the family budget. 1.1.2.2 Loss of income. During a person's working years, especially the early years, financial success and security are all about income. Unless someone wins the lottery or inherits young, the only way that they can accumulate savings or a long-term asset base is by generating more income annually than they currently need to live on. But income is dependent upon both availability and the individual's ability to continue working. And even those with jobs could suddenly find themselves without income if injury or illness caused a disability that kept them off the job for a prolonged period of time. 1.1.2.3 Loss of savings. Either unplanned large expenses or a decline or loss of income, or both, could compel a family to draw down their savings to meet current demands. And depending on the amount of savings involved and the family income resources available, it could take years to build them up again. 1.1.2. For lower standard of living. A lower standard of living is not really a risk in and of itself, but it may be a consequence of other losses, loss of income, loss of savings, loss of assets, etc., which in turn may all stem back to income lost or unexpected medical expenses incurred due to injury or illness. This domino effect could often be avoided if the client has an effective ANS insurance program in effect. Otherwise, changing financial circumstances could compel the family to sell one of their cars, move to a smaller home, or a rental unit, or cut back on, or eliminate, family vacations. And a reduced standard of living isn't merely a physical change for the family, it could also create psychological changes that are a roadblock to ambition and productivity in the future. A reduced standard of living today could translate into substantially reduced income, assets, and lifestyle in the future. 1.1.2.5 Inflation. Using the Consumer Price Index, CPI, as a guide, for example, a basket of goods that cost $100 in 2000 cost $143.41 just 20 years later, in 2020, an increase of 43%, and that during a period of historically low inflation. Looking at the long term, $100 worth of goods bought in 1920 cost $1,173 one century later. Although inflation in Canada has been historically low over the past years, 1.95% in 2019, it was not so long ago that it was at a much higher level, 12.12% in 1982. For those earning a living in times of high inflation, salaries have to increase substantially year over year just to allow the worker to maintain his standard of living. Likewise, disability income replacement products, like ANS disability insurance, need to be indexed to inflation in order for benefits to retain their buying power, particularly during periods of prolonged disability and/or high inflation. 1.1.2.6 Longevity. Life expectancy in Canada has greatly improved since the early 20th century. The life expectancy at birth for men has increased by 20.5 years, from 58.8 years in 1920 to 1922 to 79.3 years in 2009 to 2011. During the same period, the life expectancy of women increased by 23.0 years, from 60.6 years to 83.6 years. In 1920 to 1922, Canadian men who had lived to age 65 could expect to live for 13 more years, and women could expect to live for 13.5 more years, to age 78.0 and 78.5 respectively. In 2009 to 2011, 65-year-old men were expected to live until they were 83.8, while 65-year-old women were expected to live until the age of 86.7. This means that from 1920 to 1922 to 2009 to 2011, the life expectancies of 65-year-olds increased by 5.8 years for men and 8.2 years for women. 3. In general, people are living longer and spending more years in retirement. As a consequence, clients are going to need to accumulate more retirement assets than in the past if they want to avoid outliving their money. Increased longevity has the same implications for care costs for the elderly. Those who live longer are more likely to incur health complications requiring in-home or institutional care, and are likely to require that care for a longer period of time than in the past. Both sound reasons to ensure that a strong long-term care insurance program is in place. Not only has the average lifespan of retirees increased by over 50% over the past century or so, but so has the cost of living longer. In 1900, most people who lived well into their 70s, but who had health problems, were cared for at home by their families. Today it is more common for the elderly who are in need of care to live in chronic care facilities, retirement homes, or nursing care facilities. With nursing home costs running as high as $5,000 a month, with monthly fees for private retirement homes often running much higher than that, many seniors may well be faced with outliving their money and being dependent on the government or their children. In any event, many will find themselves in the position of being able to leave a much smaller, or no, estate for the benefit of their children. 1.1.2.7 Debt. Debt can insidiously erode financial plans and goals. Debt, of course, reduces net worth, the value of a person's assets less his liabilities. Average household debt in Canada in 2017 rose to $1.70 of debt for every $1 of family disposable income. Overall, in 2017, Canadians owed $1.4 trillion in mortgage debt and $630 billion in credit debt. 4. But it is not just the amount of debt that is a concern, but the carrying costs on that debt, most particularly credit debt. For example, consumer credit cards often carry annual interest rates on unpaid balances in the 18% to 24% range, or higher. At that rate, the $630 billion of credit card debt could have servicing costs in the range of $110 to $150 billion annually. In fact, many Canadians who are entering retirement carry substantial debt load, an impediment to the long-term financial viability of their retirement plans. Debt servicing, interest and minimum payments, usually comes out of current income, and current income may be put at risk in the event of health problems, like disability or critical illness. A client's failure to service debt could, in the extreme, result in lawsuits, foreclosure and bankruptcy, unless insurance is put into place to replace the client's own capacity to generate income or cover current medical costs. 1.1.3 Personal risks that threaten individuals and their families. Aside from all the financial risks discussed above, people also face personal health risks that could derail their financial plans and imperil their financial security, such as likelihood of disability, loss of independence and costs of long-term care. 1.1.3.1 Likelihood of disability. In 2017, 1 in 5 Canadians, or 6.2 million people, aged 15 years and older had at least one activity-limiting disability, according to the results of the Canadian Survey on Disability, CSD, 2017. 5. Persons were identified as having a disability if they had difficulty performing tasks as a result of a long-term condition or health-related problem and experience a limitation in their daily activities. the prevalence of disability increases steadily with age in Canada. However, over 540,000 youth aged 15 to 24, 13%, had at least one disability. In comparison, 20%, or 3.7 million, of working-age adults, aged 25 to 64, and 38%, or 2 million, of seniors aged 65 and older had at least one disability. Women, 24%, have a higher prevalence of disability than men, 20%, and this was the case for all age groups. In 2017, 57% of Canadians with disabilities had a less severe disability, classified as having a mild or moderate disability, and 43% had a more severe disability, classified as having a severe or very severe disability. In all cases, the disability was severe enough to limit their activities to some degree. 1.1.3.2 Loss of independence and costs of long-term care. Lastly, with people living longer and in receipt of better health care than in the past, there are more persons living for more years with medical conditions, both physical, stroke, Parkinson's disease, for example, and cognitive, like Alzheimer's, that leave them unable to care for themselves independently. Many of these people rely on long-term care facilities for basic daily living. 1.1 Point for needs met by accident and sickness insurance for individuals. In the event of illness, injury or medical necessity, accident and sickness insurance can provide needed funds to buy time for employees, the self-employed, business owners and their families, time to recover and return to productivity, time to adapt to a changed health status and time to weather the storms of an unexpected financial burden. As such, the needs met by ANS insurance for individuals include protection for Black small square income, Black small square savings, Black small square assets. 1.1. For 1 Protection for income. Although perhaps not immediately apparent from the title Accident and Sickness Insurance, one of the most common forms of coverage is disability income protection, insurance that will replace a percentage of a person's regular income from employment or self-employment if the insured is ill or injured and unable to work. After a suitable waiting period following the onset of disability, during which no benefits are payable, the insured will receive a monthly income payment from the insurer. The benefits will be payable for a prescribed benefit period, or until the disabled insured is able to return to work, whichever comes first. 1.1. For 2 Protection for savings. During a person's working lifetime, one of the many family goals is the accumulation of capital, savings in bank accounts, term deposits and other short-term financial vehicles, as an emergency fund or for near-term financial goals like an education fund, a boat or a new car, etc. And investments, stocks, bonds, mutual funds, RRSPs, for longer-term goals like retirement. Unforeseen circumstances, sickness, disability, medical expenses, etc., can lead to the erosion of both short-term and long-term savings. Fortunately, extended health insurance, which is a form of accident and sickness insurance, can defray the financial impact of many of these risks by providing needed cash to replace lost income or pay medical bills. 1.1. For 3 Protection for assets. Most people save for their retirement, although amounts saved vary. For example, according to a survey published by the CBC, 6 on September 13, 2017, 65.2% of Canadians put aside money for retirement in 2015 by making a contribution to either a registered pension plan, an RRSP, or a TFSA. And those assets, among others, do not necessarily get consumed during the retirement years. They are often passed on to the next generation through the retirees' estates. Or at least, that is the intent. Unfortunately, health issues in the senior years can bring expenses that deplete retirement and estate assets. Most retirees' group health benefits terminate at retirement, leaving them without coverage for dental and vision care expenses. The Canadian Life and Health Insurance Association reminds us that, depending on the province of residence, a place in a long-term care facility generally costs from $900 to over $5,000 per month. It all depends on the type of room and the funding offered by the provincial plan. 7. Critical illness and long-term care insurance can provide benefits to offset much of these costs, permitting the senior to maintain the value of his estate, to pass on to his heirs. 1.2 for business owners. The needs and goals of business owners that require protection are, in many ways, similar to those of individuals and their families. That is because the business owner does not exist in a vacuum. He is both an individual and often a member of a family. The sections below describe goals, risks, and needs of business owners as they relate to accident and sickness. 1.2.1 Goals. All owners of private businesses typically have similar goals, which may change with circumstances and over time. The goals for the business owner translate directly into individual goals. Black small square business profitability, income protection. Black small square business succession, capital protection. Black small square sale at fair market value, protection of estate value. 1.2.1.1 Business profitability. At the outset of a new business, simple survival is often the immediate goal of the business owners. Once the business gets through the first year or two and has established itself, the goal of the owners shifts from survival to profitability and growth. Whatever else their motives, business owners are in business to earn a living, for themselves, their families, and their employees. Among the many factors that contribute to profitability is business continuity. 1.2.1.2 Business succession. Many business owners consider their business to be their legacy, to carry on their reputation and identity beyond their working lives. And many of those would like to see the business eventually taken over by their children. This is true whether those children are indeed children, perhaps currently preschoolers, are in university, or are currently or prospectively employed in the business. However, the majority of family-owned private businesses do not transition down to the next generation, primarily because of a lack of planning. Even where the children might be willing to take over the business, a lack of proper preparation can result in the business failing before any transition can be effected. Chapter 5 of this manual outlines the role of accident and sickness, (ANS), insurance to provide funds to cover the business operation expenses of a disabled owner, to ensure that he has a business to return to or to pass along to the next generation. 1.2.1.3 Sale at fair market value. In many cases the business cannot be passed down to the next generation. There is no next generation, or the next generation is not capable of taking over the business. The members of the next generation cannot agree on how to divide up or carry on the business, or the next generation simply has their own life plans and are not interested in taking over the business. In such cases, the next best scenario is for the retiring owner, or the estate of a deceased owner, to be able to sell the business for its fair market value. This can usually not be accomplished without forward planning. A spur-of-the-moment sale, unplanned, is often a fire sale, with potential successors or competitors looking to take advantage of the situation by paying a fraction of fair value for the business itself, its client/customer base, or the hard assets of the business. Ideally, owners should take the time to identify in advance a suitable buyer for a business, lock in that buyer and a fair price with appropriate legal documentation, a buy-sell agreement, and ensure that adequate funding will be available, when needed, to provide for the purchase. Chapter 5 of this manual examines the role of accident and sickness insurance in securing the necessary funding, along with proper legal documentation, to ensure that a disabled business owner can obtain a fair price for the business. 1.2.2 Business risk. Business success or failure can be related to a number of factors, both internal and external. Such issues as productivity, quality of production, and the management of finances and personnel are internal matters, subject to the control of the business owner. Risk is generally defined as the chance that a given result, usually negative, might occur. Risks may be systematic, common to the business environment itself, or unsystematic, unique to the client's business itself. Businesses are, first and foremost, exposed to business risk, also known as unsystematic risk factors that relate to a specific business, rather than to the market or the economy as a whole, that could impact profitability, or even survival of the business. An important consideration in business risk is the health of the owner/operator and other key personnel, their ability to continue to provide services essential to the profitability and survival of the business. 1.2.3 Risk Management. When it comes to the risks that a business might suffer when an owner or an essential employee is injured or ill and unable to fulfill his function with the business only has two options to deal with the costs associated with such a risk. Black Small Square Self-Funding. Black Small Square Insurance. 1.2.3.1 Self-Funding. Self-funding risk is simply a form of risk retention, assumption of the cost of the risk by the business owner. An individual who wishes to self-fund the cost of a loss associated with a risk really only has three options. Black Small Square pay the cost out of current cash flow. Black Small Square borrow to acquire funds to pay the cost. Black Small Square erode savings or sell assets. None of the options is very appealing. If the cost of the loss is the reduction or elimination of earned income due to disability, where is the current cash flow to come from to pay for it? Borrowed funds could be used to pay for the loss, but borrowing money can be expensive and the funds have to be repaid. If the borrower happens to be ill and unable to work, lenders may not find him to be an attractive risk. Where would he get the cash flow to repay the loan? Savings or other assets could be sacrificed to pay for the loss, provided that the individual has the necessary assets. But those assets were likely earmarked for other purposes, needs that might go wanting, now or in the future. 1.2.3.2 Insurance. The better solution than self-funding is often to insure against the potential loss posed by risks, such as death, disability, or medical expenses triggered by injury or illness. For a modest premium paid regularly to the insurance company, an individual can be assured that funds will be available, when needed, to replace income lost or expenses incurred due to disability or a medical crisis. Of course, the premiums paid for insurance may be lost if the insured person never needs to file a claim, but the cost of this loss is likely to be less than the loss that would be incurred if no insurance was present. Conventional wisdom usually says that, with insurance, it is better to have it and not need it than to need it and not have it. 1.2 For needs met by accident and sickness insurance for businesses. Businesses, particularly smaller, private businesses, all rely upon two common factors for success: ongoing revenue generated by the efforts of owners and/or key employees of the business, and hiring and keeping quality employees. If a business relies extensively upon the services of the owner or a key employee to generate the revenue needed to pay bills and turn a profit, a disability of more than a few days of such a person could spell the death of the business. Even if little or no revenue is coming in, expenses like rent, utilities, staff salaries, and other payables still need to be met. Specific ANS insurance policies, such as business overhead expense, BOE, plans, among others, can provide funds to keep the business afloat financially for several months while the disabled owner/employee recovers. Until such time as Ingrid was able to return to work. There are many components that serve to attract and retain employees: salary, pensions, good working conditions, good management, positive management and employee relations, and attractive benefits, including accident and sickness insurance. An employee wants to know that, if he has to be off work for a period of time due to accident or illness, his income will continue during his absence to support him and his family. Even single employees would like to see health care benefits, dental, vision, extended hospital care, to cover medical expenses, a need that is even more important for those employees with families. If a prospective or current employer does not offer adequate employee benefits, employees or prospective employees are likely to look elsewhere for employment security. Chapter 2: Insurance to Protect Income. Competency component. Black Small Square analyze the available products that meet the client's needs. Competency subcomponents. Black Small Square analyze the types of contracts that meet the client's needs. Black Small Square analyze the riders that meet the client's needs. Accident and sickness insurance. Chapter 2: Insurance to Protect Income. 15.